Hi, this is Jim Chu with Royal LePage Real Estate Services. Today, my special guest is Jacob Renshaw, a mortgage specialist with Mission 35 Mortgages.
Thanks for having me, Jim.
Thank you for being on. So, let's get started. Recently, the Bank of Canada increased their overnight lending rate by a quarter point. So, in your opinion, how do you see this recent rate increase affecting the average homeowner?
Yeah, that's a really good question. So, yeah, you're correct. January 25th, we went up 25 basis points. And in real terms, what that actually means, the math of it is about $12 a month for every 100,000 of mortgage that that person owes. So, as you can imagine, could look very different for various people, and especially the clients that we're looking at a lot and seeing, doing a lot of work with right now, is the ones that took on those very large mortgages at the height of the home, prices during COVID. And with this rate increase, we're really looking at as I don't think this single increase is necessarily the one that's going to break the camel's back, if you will. But I think it's definitely, I'm sure as you would agree, really the cumulative effect of all of these rate increases, the eight increases over the last 12 months. We've seen some people's payments jump from mid 2000s all the way up to now over $4,000 per month for that same mortgage. And so those are the people that we're really looking at, making sure we're able to protect cash flow, ultimately make sure that the household budget per month is safe, and that people aren't choosing to pay their mortgage over buying groceries. It's not the situation we want for anybody. Um, but with that being said, yeah, I think people are faring pretty well through it. And so, with that being said, something I'm really interested to get from your perspective as well. Obviously, on the real estate side, seeing some different things than me is in general. We'll get into some more specific things, but I'm curious, what are you expecting to be the best opportunities to arise out of 2023 in this year? Obviously, everyone has some differing opinions on what the market's going to look like, but as you know, opportunity can come from all sorts of scenarios. So I'm curious where you see those maybe being.
Well, there's almost like the two extremes. Those areas further out of the city where people kind of flocked to during the pandemic. They had the highest rates of increase in prices, so they're also seeing the highest decreases in prices. So there's opportunities there for home buyers, such as Guelph, uh, London, maybe not much London, but Guelph, uh, Kitchener Waterloo, out towards Oshawa. So further outlying areas, there'll be some good deals there, I feel. But even still, a lot of good opportunities. Actually, the assignments, people who bought
Mm.
uh, 3, 4 years ago, pre-construction, because of all the rate increases. A lot of them are having troubles closing. So yeah, some good deals with assignments these days, but you have to be ready to buy. So that's the thing. Is like, to be honest with you, there's lots of good deals out there, but you have to be ready to buy. Okay.
Yeah, yeah, no, I 100% agree with that. Absolutely.
Yeah. So next rate increase is in March, I do believe. So let me ask you, where do you see rates going in the next 6 months, year to 2 years?
Yeah, that's a really good question. I think that's definitely on the top of everybody's mind at this point. So I think there's kind of two ways, to tackle the variable first, which has obviously been the superstar of all this. Maybe not all for the greatest reasons. But there's kind of two ways to look at what may happen. I think a best case scenario, and like we heard on January 25th from the Bank of Canada, is that we're going to see a pause over the next couple quarters, perhaps, maybe even to Q3 of 2023 at that 4.5% overnight lending rate. And the reason for this is to allow some of those really lagging indicators that take time to show up in the official data to be able to show us and to show them where inflation's headed. Ultimately, that's the kind of the elephant in the room with all of this stuff going on is we want to see how that's trending. So best case scenario that they outlined is if it's trending in the right direction, inflation's coming down like we need it to, then we can expect that we're probably at the peak of where the Bank of Canada overnight rate's going to be. Now, with that being said, I don't think that we're ready to start expecting seeing the variable come down by any means. Even if that's the case, I think it's going to be, a good probably 12 to 18 months before we can start expecting it to come downward. And even when it does, I think it's going to be a much more of a slower decrease, probably quarter point here, quarter point there, with more pauses along the way rather than a drastic cut. Um, but on the flip side of things, I think we're seeing a lot of opportunity right now with fixed rates. We're already seeing great opportunity to fix in some of those variable clients and save them considerable amount of money every month in those kind of 3 to 4 year terms as well, kind of hedging them for some better opportunities later. And we're seeing from the 5 year fixed rates that they're already pricing in future discounts. So with kind of the data we have right now, we're led to believe that I think the fix will continue to come down towards the end of 2023, and we'll really start to see some noticeable opportunity in 24 with them.
Huh, good. Good to know.
Yeah. So what I'm really curious as well, and we kind of touched on it before you and I in our conversations. The market's a little slow right now. Not tons of volume going on every month. And so I've been thinking a lot about what's unique. I don't deal with obviously clients looking to sell necessarily. That's really where your expertise comes in. And I'm curious how the approach for that has changed with listing a property to sell and to attract really strong offers from those buyers that are still out there.
Well, gone are the days where you can just stick a sign on the lawn and expect 20 or 30 offers. I'm sorry, those days are gone. More than anything, you really need a professional that knows what they're doing. Somebody that doesn't take listing photos with their cell phone. Somebody that actually spends the money, because that's the thing. Uh, a good agent will spend anywhere between, I'd say, $1,000 to $2,000 listing a property, and that's the thing. It doesn't come out of the seller's pocket. So you know, sellers have to realize we're investing in your property, you know, wanting to sell your property. So keep that in mind. And so, with that being said, agents need to step up and to be honest with you, do the work that you're getting paid for. You know, proper listing photos, 360 tours, um, floor plans, and walkthrough videos, and not the old traditional marketing where you send out a few flyers. You really need to step up your marketing game, such as marketing on Facebook, Instagram, marketing the videos on YouTube. So you really need to step up the marketing to get the offers. So
Yeah, absolutely. I think you hit the nail on the head. Working with a true professional, I think really shows through in tough times like this, right?
yeah, exactly. And you also touched upon it regarding fixed rates being, I guess, I think you said attractive these days. So, so in your opinion, what's Well, can you, I guess, expand upon the fixed and what's going on with variable rates?
Yeah, absolutely. So again, as we know, variables come up considerably over the last 12 months. And again, that's really what people need to understand. That's Bank of Canada and the government's main tool at this time, and kind of how they operate to combat inflation. And we're all feeling that in every income class, every price point, every city, every area. The groceries are costing more, gas is costing more, cost of living has gone up considerably. And I touched a little bit upon, we are expecting to, at this time, go into recession sometime, probably Q2, Q3 of 2023. Kind of a lot of gray area around that as far as what some of the data on that's going to look like. A really interesting thing right now is that we do have really strong employment numbers in Canada, which is unique kind of when sometimes a recession may be looming around the corner. You start to see that unemployment start to rise. Um, and that's just something we're not seeing yet. So it's going to be interesting to see what some of those data points bring later in the year that could maybe kind of turn, steer the ship another direction, if you will. Um, but again, I think the best case scenario with the variables that we are going to hold steady, and we kind of are at the peak now. And we've even been seeing on our end volume of mortgage applications coming in, buyers that kind of were sitting on the sideline even with healthy budgets, but there's kind of just that fear of the unknown, not sure if they should take the plunge yet or kind of just wait it out. I think you're seeing a bit more consumer confidence come back in that kind of the worst is over of those hikes. But again, with that being said, I think even if inflation's coming down, we can't expect that there's going to be some drastic cuts in the near future, or we're almost kind of going back to square one with that issue. And so I do think the fixed are looking a lot more attractive in comparison. Overall, historically speaking, variable tends to save more money over time. But of course, this is a perfect example of those short-term blips in that bigger timeline. Can be the opposite. And I can tell you the most common attractive product right now is definitely in between those 1 to 3 year, even sometimes 4 year fix, where you can get some nice deals. But again, maybe not lock yourself into that 15-year high for too long, and hopefully still catch some better savings in the years to come. So I think over the next few years, fix is going to be really attractive again to people. And it's cyclical, right? We're going to go through those cycles of those temporary times where fixed rates are substantially lower. Uh, but inevitably, the clients that need that flexibility that the variable offers, which is really the staple of that product, I think are going to kind of ride it out and see the value in the long run there. So I also have, we touched on this as well, but I'm curious. Inventory, that's a big one that everyone's talking about. Inventory is pretty low, but I'm curious, what do you think about inventory, and more importantly, what is it going to look like over the next even 6 to kind of 8 months with that spring market, which may look a little different, but with that around the corner.
Yeah, inventory is going to be a challenge. January we had, I think, around 8,000, sorry, about 9,000 active listings, and that's nowhere near enough to sustain uh, the GTA. We should be around, well, in past years, January, we should be about 12,000, 12 to, 14,000. That's a healthy amount. Granted, 9,000 is still a hell of a lot better than the 3 or 4,000 that we were at January of 2022. So, you know, that's good. Um,
Mhm.
and I think once people are, especially if there is no change in the next uh, bank account announcement, people have confidence. People will be used to the higher rates, and yeah, you'll see them. We'll see more inventory, and we'll see more buyers for sure.
Yeah, that's a really good point. I agree with you there. I think almost seeing that one announcement at least where it holds steady will kind of just drive home that point of, okay, maybe it's the time to act if my budget, has stayed healthy up to this point.
Yeah. So, first time buyers. That's uh, I guess that's everybody's kind of question. In a mortgage perspective, what would you recommend to a first time buyer?
Yeah, that's a fantastic question. And you're right. I mean, I think anytime we have, any very crazy swing market wise, up or down, it's the first time buyers that are most drastically affected, right? You have clients who, majority of their down payment, outside of maybe if they're getting gifted funds from family, which we've been seeing obviously a lot more and more every year, but it's all coming from saving paychecks. They don't have a house to sell already. It's a lot steeper hill to climb in that sense. And so what we've seen as rates go up, and you have that qualifying interest rate with the stress tests continue to rise with that we have to use, it very quickly starts to strip away purchasing power. But the unique thing about first time buyers, I think, as well, is even when we're in a, I guess more neutralized rate environment, and not even the one we see right now, we find that often fixed rates end up being a product that suits first time buyers in a lot of ways. You're getting into your first home, you're taking on all the learning curve that comes with being a homeowner in itself. If we can give them peace of mind on just one other thing, which is their payment, knowing that that's never going to change for the term of their mortgage. A lot of first time buyers appreciate that and like a product like that. But you know what? We've actually been surprised to see a lot of first time buyers have maintained very healthy budgets throughout this entire cycle. I know personally, I've been working with clients even over the last 12 months, that since rate increases continued to happen, we were continuing to redo the pre-approval and update it to see, okay, what does it look like now? How much did we lose? But you have to remember too, there's always that inverse relationship between interest rates and home prices. Now, don't get me wrong, it's never an instant cause and effect where as soon as a rate goes up, the house price comes down perfectly to that. But overall, we've definitely seen, less competition happening out there, which is great for our first time home buyers. They're the ones, especially, we always love to have that finance condition there, the home inspection, make sure they can do all their due diligence they need. And they're in a market they're actually able to do that. They're facing in a lot of areas overall less competition, which is fantastic again. And they are finding some a little bit better deals in areas where just 12 to 18 months ago they were completely priced out, and sitting on the sideline. So my advice at the end of the day for any first time home buyer right now that's definitely unsure and hearing a lot of different opinions out there, ultimately, it's not a rate conversation. Work with a real professional, a real good mortgage agent or broker, and they will tell you it's a budget conversation. It's a conversation around affordability. I always like to say, you marry the house and you date the rate, because over a 25, 30-year mortgage, you're going to see many different types of interest rates and have little control over what happens in that market, right? But ultimately, if we can break down the affordability and make sure that that's strong, and you're in a healthy position and it's a good purchase, everything makes sense. Then getting in the market's the best thing you can possibly do, because your mobility within the market becomes drastically better once you're in for the first time. So that'd be my overall advice. Don't get too caught up in what's happening in the short term, and just look at the bigger picture. Exact same kind of question for you. I'd be curious from your perspective as well. I know realtors, I think you guys tend to a lot of time be that first point of contact. And obviously, really, I like to call it like the Batman and Robin. Like, I'm the Robin of the scenario here on the back end, but you're kind of the Batman leading these guys into the wilderness, and showing them these homes, and making sure it fits their needs. So what's your advice, going forward for first time buyers?
Yeah, my advice for first time buyers is always get yourself pre-approved. Speak to a mortgage broker. There's nothing worse than going out looking for a home. You find your dream home, and then you realize you can't afford it. You know, that's really heartbreaking. Or even worse, maybe, you know, because you thought you could only afford so much, you find a house that you're settling on because that's all you thought you could afford. And when you go to the mortgage approval, you realize you could have comfortably uh, handled a higher mortgage, allowing you to buy a bigger house. So that's the main thing, is to get yourself pre-approved. But also, I'd like to say is that alluding to you know your analogy about you know dating the mortgage and marrying the house. I think that's what you said. But
Yeah.
I always like to tell people, especially these days, you know, you get your house. The mortgage might not be great, but in about a year to 2 years, when rates start to come down, you can renegotiate your mortgage. Okay, but you can't in a year to 2 years renegotiate the purchase price to what they are now. You can try. You might get lucky, but I seriously doubt it. So that's the thing. Is like, if you're ready to buy, don't be waiting because you think, you know you want to save some money on the mortgage, by waiting a year or 2 years. Home prices are going to go up by then. And also, what's even worse is if you're waiting for mortgage prices to come down in a year to 2 years and you're renting, just think of this. For
Yeah.
those for that year to 2 years you're waiting, you're paying somebody else's mortgage, helping them build equity while you could have been doing that for yourself. So
Absolutely. Yeah, I think that's a fantastic point. And it kind of just goes back to that overall, trying to time the market strategy, right? Which never proves to be a good strategy
now
ever.
you can some people get lucky timing the market, but honestly, if you're ready to buy, just buy as long as you're comfortable with the payments, as long as you're aware of your financial obligations. It doesn't matter what the rates are, you know, as long as you're
Yeah, I totally agree. And I love hearing that. And I think the best way I'd sum that up, get your strong pre approval, all your ducks in a row, all the
yeah,
numbers. So you're fully equipped going out there. And then just lean on the fundamentals, right?
yeah. And you know, a good realtor, not only will they look at your mortgage approval, but there's, in my experience, when a mortgage agent does their qualifications, they use certain general averages to figure out the mortgage payments. And so if we can, you know, reduce, some of the numbers that were used, like say for example, you're buying a condo. Now, one of the fees or one of the expenses that the mortgage agent uses is the maintenance fee, but they don't know how much it is, so you take an average, correct?
Correct.
So if we can, uh, if I know it as an agent, if I know how much the mortgage broker is using for the maintenance as a calculation, and if I can find you something with a lower maintenance fee or even a lower property tax, that would mean being able to, you know, afford you a higher purchase price, afford you something a little bit nicer, while at the same time keeping your payments the same. It's not like you're paying more. It's because we were able to, knowing what was used to calculate the mortgage amount, you know, not say we're manipulating anything. We're just juggling numbers to make sure your payments are still the same while allowing you to get the best product.
Yeah, absolutely. Great point. Yeah, it's kind of like I think of it as like you got these couple baskets, like you said, juggling different numbers. But if we could reduce from here a little bit, we may be able to increase over here, and ultimately just try to, as best we can, hit that client's goal of what kind of house they want to be in, and accommodate that and align it with their budget. So you're absolutely right. Like things are very malleable in that sense.
Yeah. So, Jacob, this has been great. It's been very educational. I'd like to thank you for taking the time to speak with me and to my uh, viewers. So, once again, thank you very much. I'm Jim Chu with Royal LePage Real Estate Services. And like I always say, if you're thinking about buying or selling real estate, just hop on the choo choo train. Take care. Bye for now.